Hello, everybody, and welcome back to another episode of Mind, Money, Soul. And today I want to talk to you about what to do if you are scared of investing. Now, before I get into this, I just want to let you know that I'm hosting a free Intro to Investing masterclass on Tuesday, the 27th of August. I'm going to talk about why we invest, compounded interest, different terminology. I'm going to debunk some myths, and I'm also going to give you 4 steps so that you can get started. So if you want to join, there is a link in the show notes. So go click, go get involved, and I cannot wait to see you there. And now let's get into today's episode. So I had a very interesting experience recently with a hot guy. So I went to a barbecue. I knew some people, didn't know everybody. Everybody was in couples there, so that was fun. But I got kind of like pushed off with the only single guy at the party. And it was awkward because I felt like everybody was staring at me and watching our conversation. This has nothing to do with the story, I'm just telling you. But he started talking to me about crypto. I was like, okay, he's a crypto bro. Like, don't know how I feel about this. I've had a lot of conversations with crypto boys, finance bros, that just talk at you. And they're like, Bitcoin's the next big thing. If you're not doing it, you're missing out, blah, blah, blah. And they just come at you and you're just like, fuck off. But this guy, he actually, he did a really good job of explaining it to me. We had a really good conversation about it. And I was like, oh, okay. And initially, I dismissed it, like I said. But then the more he explained it to me and made it relatable, made me understand, the more I was like, oh my God. And I had this moment where I was like, the way I just felt about crypto and Bitcoin, scared, didn't understand it, so therefore I just dismissed it and didn't want to know about it. That is how people, especially women in my community, think about investing when people just come up to them and start talking about it. You're like, I'm scared of it. I don't understand it. I fear it, and therefore I don't want to hear about it. I don't want to learn about it, and I think it's not for me. So it just gets completely dismissed. And I had that feeling straight away, because all of those things that you guys think about investing in the stock market when I talk about it, I thought about something that I didn't understand, Bitcoin and crypto. And I just found it really interesting, right? Because it makes you be like, oh, I don't know if I trust you. I don't know whether to believe you. What do I know to believe? Where do I start? And then having that moment, I was like, oh my God, this is how my audience feel. This is how my community feel. And this is what I need to help them break through. Now, caveat to this, please don't go out there and just listen to all the finance bros. And I'm not saying crypto is the answer to your problems and you shouldn't be scared of it. But that feeling that I had of fear that I had to work through to be open and minded enough to listen and have an interest to go and learn myself is what you need to have when I'm talking about investing, especially if you feel scared. So, what to do if you are scared of investing? Let me break down some different sections based on what you might be scared of. So first of all, what is it that you're actually scared of? Is it that you're scared of losing money? Is it that you are scared that you don't know enough? Is it that you're scared that you don't have enough? What is the reason that you're scared? So if you're scared of losing money, you need to understand that on a bigger scale and what that actually means, because losing money comes in so many different forms. It could mean losing all of your money and having nothing left to show for your investments, or it could be making a loss and losing a bit of money. 2 very different things. So I want to give you this analogy that I talk about, and this is one of the analogies that I give in my Feel Good Investor course, so you're getting a little bit of insight into that. But imagine that you buy a house. Now, a house is an investment, even though it's might not feel like it. You get a mortgage, you're buying an asset, the property, and you hope that it goes up in value over time. This is the same as your stocks and your funds. You buy an asset and you hope that it goes up in value over time. Now, if you bought a house and you were there and you plan to be there for 30 years, you were like, this is my dream house, I'm going to stay in it for 30 years and then I'll sell it further down the line. You would not call up your investor, you would not call up your valuator, I don't know what they call them when they value your house, and say, hey, do you mind just coming around and valuing my house today? And you wouldn't do that every single day. Why? 1, because it doesn't matter, because you're not selling the house for another 30 years. So why are you checking? Why are you asking? But 2, we are at the mercy of the housing market. There are so many different things that affect the housing market, right? The economy, whatever's going on with that, the government that we have, the way that people view it, buyer behavior, seller behavior, all of that kind of stuff. And some of it is completely intangible. It's human behavior and human psychology, so it's out of our control. If you looked at it, and let's say you bought the house at £500,000 and you were like, okay, and the valuer came round and they said to you, Right, not gonna lie, today your house is only being valued at 450. Technically, the value of your asset has gone down. You haven't actually lost any money though, because you haven't yet sold the house. If you on that day decided to sell the house and there was a buyer and it went through, then yes, you'd have lost £50,000 because you sold it. You no longer have the asset, you now only have the cash worth that amount of money, right? So that in that instance, you would have made a loss. So if we compare this to investing in the stock market, if you check your investments and it goes down, like the stock market always does, just as it always goes up and down, and you were like, and you sold it at that moment in time, yes, you have lost money. Now, you wouldn't have lost all your money, but you've lost some of your money. You've made a loss. Now, if we go back to the example of thinking about the house, right? You're not going to ask the valuer to check it every single day because you don't care, because you have a long-term investment strategy. So you just wouldn't look at it. The most important thing is getting it valued maybe a couple of years from selling it, and then obviously when you actually want to sell it. So that's one thing to think about. Now, when it comes to like the fear of like losing a bit of money, like I said, investing in the stock market has risk, but you can mitigate and reduce your risk by having a specific strategy and understanding how long you have to invest, the types of thing you're interested in investing in, what your own investing goals are, all of those kind of things. Now, when it comes to the thought of losing all your money, I am sure that when you talk about investing in the stock market, you've had so many people say to you, oh, my uncle lost loads of money on the stock market. My grandma, she lost everything on the stock market, blah, 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 all of these kind of things, right? Horror stories. Anytime someone says that to you, say, can you give me some more information about that? What were they investing in? Did they sell when there was a crash? Did they get scared? Did they let their emotion get in the way? Did they pick really risky stocks instead of, more safe, quote unquote, safer, more diverse funds? Like, getting the details. Don't let those horror stories put you off. Now, if you invested consistently into an index fund for 20 years as a minimum, and you didn't take your money out because you had a long-term strategy, there are statistics to show that there is a 100% chance that you will make a return. So therefore, you will not have lost any of that original money. How much you'll obviously make is going to be dependent on so many factors, but you won't lose your money. And there is also research that shows that the chances of you losing all of your money as an index fund investor are extremely low. Extremely low. So when you think about the odds, are you going to not take some risk to invest because of the very, very small percent chance that you might lose all your money? And I mean, it's probably it's really small. And when also, if you invest consistently, there's stats that show that you will 100% make a return, no matter how big or small, but you are going to make one. Those odds are pretty nice. Now, to caveat all of this, you need to still do your research. You need to understand what you're investing into. And I'm referring in this example to investing in index funds, which is a pool of investments. So like a global market fund where your money is spread out across companies across the globe, for example. Now, obviously, investing in individual stocks is riskier because your money is with that one company. So it's a bit more volatile. It goes up and down a bit more. But you can still learn how to invest and how to pick stocks. It just takes a little bit more time. But just because you haven't invested before, it doesn't mean it isn't for you. And it does not mean you are just going to lose your money. So this is why understanding the concepts about investing is so important. Okay, number 2, if you are scared of investing simply because you don't know enough, think about day one that you started your first ever job, or the job that you have now. You probably knew nothing, especially if it was a new career, a new role, a new industry. You don't know anything. You don't know the systems. You don't know the work culture. You don't know how to do certain things. Doesn't mean you can't do it. Doesn't mean you don't have the capability to learn. Now, at work, you get trained up. You've got a boss, you've got a manager, and they are holding your hand throughout the whole process, right? So that's great. They are teaching you what you need to know. You might need to go and do some learning yourself. But either way, over time, you learn, and then one day it clicks, and then you're years down the line, and you can never remember how it felt to not know. And imagine if being scared to start because you didn't know enough about that role stopped you from going for the job, right? You see what I'm getting at? So don't let the fear of not knowing enough stop you from getting started investing and getting started with learning. Knowledge is power, especially when it's put into action. So yeah, it's really important to learn, basically, and get confident in that. Now, you cannot mess around and just hope that one day your finances are going to sort themselves out. Lovely as that would be, if they just one day miraculously did that, that is not being an adult. Am I right? You got to learn how to be an adult, and that includes managing your own money, and that's okay. But it does mean we have to do the work. You didn't get taught in school. You didn't get taught by your parents or whoever else around you. You got to learn as an adult, and there are so many amazing resources out there that can help you do that. So you've got to take it upon yourself and find out what really fuels you in life. Why do you want money? What does wealth mean to you? What does freedom look like to you? What can money give you? And that can be your fuel, your North Star for getting started with investing. You can use that to drive your motivation to learn. It might not be of interest to you in the way of this might not be the most interesting and exciting topic, but it doesn't matter that you don't enjoy it. We don't have to enjoy everything that we do in life. We don't have to only do the things that bring us joy. In the book Big Magic with Liz Gilbert, she talks about choosing your shit sandwich when it comes to a career. No matter what career you'll have, it's going to come with some shit. If you're building your business, let's say you are, selling stationery. You may love selling stationery, but you may hate doing marketing. You might have to do that though at the start of your business so that you can get it off the ground, for example. Now, when it comes to investing, you want all of the beautiful goodness that comes with compound interest and growing your money. But the shit sandwich is that you may find it boring and uninteresting, but you still have to learn how to do it. The level to which you learn is obviously down to you, but you still have to do it. Don't let not enjoying it or not having enough information stop you from getting started learning, because you are capable of doing that. I believe in you. I trust in you. You'll get this. Now let's talk a little bit about what happens when you let fear hold you back. So I want to give you a bit of an example. If you start investing now and you put away £400 a month consistently for 30 years into an index fund or a bunch of index funds that gives you on average a 7% return, ignoring inflation, you would have put £144,000 away of your own money, of your own cash that you've created or bought in, but you would have a total of £487,000 in asset value. So your funds, your stock portfolio would be worth about £487,000. That is crazy, okay? You made a big return. Now, if you wait 10 years and you only give yourselves 20 years to invest, and you still put away £400 a month, you would have invested £96,000 of your own money, but your asset value would only be worth £208,000. So, as you can see, right, in this example, massive difference. By waiting 10 years, you've lost out on £50,000 worth of interest, worth of free money. So this situation, compound interest and time, applies to no matter how much money you put away. So whenever people hear examples, they say, oh, you gave this example, but I don't have that much to put away. It applies if you put £1 away. It applies if you put £400 away. So let me just give you an example of if you did £50 a month for 30 years, okay? Over those 30 years, you've invested £18,000 of your own money, and the value of your assets would be £60,988. So you've basically tripled your money. Okay, that's the same as the first example. The numbers are smaller, but the concept remains the same. You've tripled your money. But if you waited 10 years and you put £50 away for 20 years a month, £50 a year. No, start again. £50 a month for 20 years, Jesus, that's a mouthful, you would have invested £12,000, but you would only have £26,000 in asset value. So that means you've only about doubled your money. So again, you can see how much you're missing out on by waiting, no matter how big or how small. So all of this being said, what I'm trying to say is I understand you're scared. I understand why you're scared, and I can relate to that because I've been in a similar position when I first learned about investing in the stock market, but also when I learned about Bitcoin the other day. But really learning how to work through that fear, how to reduce that fear, and how to act upon it even though you're scared anyway is going to be so important for you building your dream life and for actually building wealth. Now, I mentioned this at the start, but don't forget I am hosting a free investing masterclass, which is going to be on Tuesday, the 27th of August, that you can sign up to. I hope to see you there live. There will be a recording as well if you can't join live. So yeah, get involved, and thank you for tuning in. I hope you found this interesting, and I will see you all next week.